Welcome to CEO Interviews, a production of Gorecom, in which we take the time to speak with small cap executives about what's going on at their companies. With us today, happy to have him for the first time ever, Matt Hawkins, chairman of Harborside, trades on the CSC under the stock symbol HBOR, and for our friends in the US, HBORF. For those of you new to the story, and that's going to be a lot of you, I think, because even though Harborside's been public for a little less than 2 years, they did go through some changes last year before they started with us, so they're kind of quiet. What you need to know is this: they're a California-based, vertically integrated, fully licensed cannabis company. They've got 3 primary segments. They got retail, wholesale, and cultivation. They're founded in 2006, which makes them one of the oldest, most respected cannabis retailers in California. In fact, they had one of the first 6 medical cannabis licenses in all of America. Over $400 million in cumulative sales. So they're executing. And right now, they've got about 3% of California's entire retail market. This year, for the first 3 quarters, revenue over $50 million, $50 million plus, gross profit $24 million plus, EBITDA $51.5 million, and they're expecting more. Here to talk about that is Matt. Welcome to the show.
Thanks, George. I should bring you along with me. You do a great job of talking us up.
Well, you make it easy, right? The facts speak for themselves. I'm not spinning there, that's for sure. Let's talk about the company. I want to do a deeper dive into some of the numbers, all that. But the first thing I want to ask is, how unique is it that you're fully vertically integrated, that you've got the cultivation, the retail, the wholesale, and why does that make you stronger than most of your peers?
Great question. The reality is that one of the things that was lacking before we came in and took over the board in November as one of the larger investors in the company was we weren't paying enough attention to the asset that we had in Salinas, which is the farm, and we can make our own products from what we have in Salinas and generate 80, sometimes 90% gross margin on that. In addition to that, we can wholesale the heck out of that across the state. Cultivation, especially, outdoor greenhouse growing is not as prevalent as one might think, especially where we are up in the golden triangle, so to speak, of cultivation in California and in Salinas. So we're using that as not only an asset internally, but an asset externally to grow our wholesale business.
Yeah, and that's a massive advantage because you get to control your supply, control your costs, but you've already got distribution channels in place because you had one of the first licenses and one of the oldest retailers. So I thought that was genius. Let's talk about the financial performance of the company. So both revenue and EBITDA, what I'm noticing is this: the retail side is bigger, but the wholesale side is catching up. So what can you tell us about each of those sides of the business? Because you're putting up unbelievable numbers.
Yeah, I mean, I think, we will in 2020, I think it's going to be somewhere around, 63 million or so, 10% EBITDA and growing. We've been, break even to cash flow positive for a while now. We've got plenty of cash on the balance sheets. We just announced a pipe that we're closing on. We've got equity in the farm. We have the ability to do a lot with what we have on our balance sheet. And to your point, I mean, the retailing that we've done, especially from our flagship location in Oakland, which is one of the oldest dispensaries in California, has a very, very solid base. And another 4 retail operations in the state. We're probably going to get rid of the one we have in Oregon. But we're looking to grow through selective and accretive M&A to become one of the largest single state operators in California. And with that, our wholesale operation will dramatically grow simply because we're going to be fulfilling the needs of the product needs of the stores that we end up acquiring. And then in addition, we've got the opportunity to fulfill, some of our friendly competitors' wholesale needs as well.
Q3 seemed to put in some really good performance. I mean, you guys have always had steady, great numbers, but I saw a big jump there in Q3, both on right across the board, revenue, gross profit, EBITDA. What was it about Q3 that suddenly started supercharging the business?
Yeah, I think that we've done a lot of work in the past year and a half to kind of clean up some of the sins of the past, so to speak. We've got, a professional operating team in place where we've just launched a search for a world-class CEO that we engage Hydrogen Struggles to do for us. And that person is going to need to have multi-channel talents to succeed with us. And so that's a real important aspect of our business. It's like you mentioned earlier, there's not many companies in California that are as vertically integrated as we are. And that's a benefit. And I think the third quarter just showed the fact that in addition to the boost that the industry was getting just through the pandemic, and quite frankly, a tamping down of the illicit market, where everybody was doing better because people were just tired of buying stuff from unsafe means. I mean, we were one of the first in California to offer curbside pickup, safe dispensaries with social distancing, and delivery. And so that continued, and we expect that to continue going forward with the lessons we've learned during the pandemic.
2021, looking forward. Full year 2020, you expect about 63 million. 2021 on the top side, you're expecting 72 million. So that's a nice revenue jump. But what caught my eye was the fact that this year's EBITDA, you're expecting to come in between 8 and 10%, but next year, 15 to 17%. That's great margin growth there, bottom line growth. Is that just coming from efficiencies? Is that coming from a different product mix in terms of how you're achieving your revenues? Where does that come from?
Yeah, it's going to come from, yeah, I mean, efficiencies operationally for sure, but more importantly, I think it's utilizing our wholesale capabilities that we have. I mentioned earlier that our margins from our own brands like Key and Harborside Farms, and even the clones we're growing at the dispensary. We've got 160,000 square feet of canopy out there. So we've got the opportunity to grow a tremendous amount of product. And we can use that raw material for ourselves, but also to, like I mentioned, fulfill the needs of others. And your margins on that are a lot better than selling other people's products in your dispensary, which we'll continue to do because we have to, and we understand it's part of the business. But having your own line of product is tantamount to success in this.
The thesis at Agoracom is that, and it's been this for the last 6 months, and we're starting to see it happen, is that the cannabis complex, the entire complex, was going to begin its next bull phase and longest, akin to what we saw in Web 2.0 when everyone went through the moratorium after getting blown away and blown up by the dot-com crash, swore off internet stocks until they realized they were here to stay. They just had to buy better quality companies. How do you guys feel? I know you can't give me projections going, not on this interview anyways, for 2022 and so on and so forth. But how are you guys in planning your business? How do you see the cannabis industry evolving? And I guess primarily for California, because you're single state. Sure. How much growth do you see coming out of the entire industry over the next 5 years? Is this a 5-10 year growth cycle? How do you guys look at it?
Well, I'll give you the example that we use at my day job, which is the founder managing partner of Entourage Effect Capital, which was the entity that has made investments in Harborside since 2014. We've made 66 investments to date, all throughout the legalized landscape of the United States. We do have a pretty solid footprint in California, but the whole thesis, just like it is at Harborside, is to build scale in advance of legalization. Legalization is on its way. It could happen in 2 to 3 years, could happen even sooner, could happen 4 years, but it's going to be within eyesight of investors coming into not only our family of investment vehicles, but also into Harborside directly. And because of that, once institutional capital comes into the game, or once institutional capital provides the growth engine and capital that some of the large MSOs need, that's going to trickle down to the single state operators. And California is let's face it, being an operator in both Northern and Southern California is like being a multi-state operator. And so California
that's true.
California is the bell cow. It's arguably an $8 to $10 billion marketplace. And that's without converting more of the illicit market that still exists. So as this thing matures, as more capital comes in, as the illicit market continues to get tamped down, we see growth that's going to be, it's off the charts. And it may be a situation where exits are built in for investors simply because there's capital becomes a commodity at that point when institutional capital is involved.
Do you see it be going? Do you see it going through the same long-term growth phase that Web 2.0 went through when, dogfood.com and van.com or whatever they're called back then, those things died because they're just .coms, but along came LinkedIn, Google, and those kind of
Yeah, I just, George, I don't ever use the example. I mean, the web and .com 1.0 and 2.0 is kind of where I stopped with the comparisons. Because the reality is that this is a real product that generates real revenue and real earnings and has from day one. And so, but when you get more efficiencies attached to that, i.e. less taxes, i.e. more, ability to, cross state lines, ultimately, national advertising campaigns, all that stuff that doesn't exist right now, you're just going to make more money because this is an industry that is growing by leaps and bounds, and it's really more of a conversion of a market, not a creation of one. This stuff's been around for generations, and everybody just wants to ignore it. But the reality is now we're able to tax and regulate it in the legalized states, and it's going to be just like alcohol and tobacco, if not larger.
Is legalization, your thesis on legalization, helped by the election of the Biden administration, or do you think it would have been inevitable under either Republican or Democrat?
Yeah, I think it was going to be inevitable, but certainly having an Democratic administration and a Democratic legislative body helps matters for the industry. It's just getting more attention than it did in the previous administration. The reality is this, George, is that every single state where it's been legalized cannot get off of this. It is the tax revenue is so substantial that they can't lose it at this point. And the federal government's getting their share regardless through 280E and everything else. And they may as well just make it more friendly and palatable to the industry to where we can convert more of that market to make it even more commonsensical at the end of the day.
The M&A side of your business, because we're still in the early part of this growth phase. Are there great opportunities on the street where you guys can still walk in and buy things at really at cheap value? I don't want to say cheap, but really nice valuations that you guys can help turn around, given the fact you're vertically integrated and the expertise you bring to the table?
There's no doubt about it. When we assembled this board to come in and do the takeover that we did back in November, we made it very clear. We had three things we were going to do right away. One, we were going to go out and hire a world-class CEO, and that search is underway. We're going to be public about the fact that we're going to settle on our 280E issues with the IRS. And three, we're going to go through transformative M&A with other companies in California to become the preeminent single state operator. And the announcement of our pipe that we're closing next week just is that first step in order of making those things happen. And we're well down the road with several companies right now that where the operators have removed their egos because they understand that the only way to get to that next level where they're attractive to large scale MSOs or other financial engineering tools when legalization occurs is to work with companies like us that have the listing that could very well be undervalued currently and build something that's unique and integrate it across the entire state to become that entity that gets the attention of everybody.
I'm going to leave the last question to you because look, I think we've gone through a pretty thorough review of the fact that you've got these three verticals. They're all performing well. That's showing up on the financials, right? This isn't just Matt. We would expect, what would be expect out of the chairman? We'd expect to be optimistic, idealistic, and so on and so forth. That's what most small companies are. But the fact of the matter is, you guys put up 50 mil so far in the first 3 quarters. You're expecting 63, and then for 2021, you're expecting as much as 72 million revenue with great EBITDA growth. And I'm not even sure if that includes potential M&A or if that's just straight organic
Oh,
from that point.
yep.
We've touched on it all. What people need to know. Last word to you. What is the people don't know, or what do you think we should end off with here?
People, it's hard for me to say one thing specifically, but I think that one great thing that Harborside has in our court is the fact that we've been around for so long. It is a tried and true California brand, in particular in Northern California, and people recognize the name and their logo, and the success we've had for a long period of time. We've now professionalized the business. We've made it less about cannabis and more about making money, and while staying true to our the core values of making sure the customers are always right, the customers are always first, the product is always world class. But it's a different feel about it now, and I think investors will hopefully get rewarded by that.
Well, I think they've been rewarded since you guys kind of took over the show, because the reason I'm looking over is I got a big screen with the company's chart. And when you guys kind of took over and everything is around 80 cents. And today, as we speak this very second, you're $2.65. So I think that's a pretty good reward so far. But at a $57 million market cap, and I don't want to talk about, so make sure everyone home, this isn't financial advice. We're not, but at a call it $55 million market cap, when you're going to break $60 million in revenue, seems to me there's a lot of room to grow just on the multiple. And then there's also the additional growth going forward. So Matt, we're looking forward to having you back on in the near future, or as soon as your hunt for a CEO is done, and you get him or her on board. Looking forward to have them on the show, because you're an exciting company, and I can't wait to see what happens at Harborside. Not this year, not next year, but the next 5 years. I think it's going to be an amazing story to follow, and we're privileged to have you on at this early stage.
Awesome. Thanks, George. Appreciate your time.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple. To Matt Hawkins, he's chairman of Harborside, trades on the CSE under the stock symbol HBOR. For our friends in the US, HBORF. It's up to you to start doing your due diligence. 2 ways to do that. First, get over to Agoracom, get to the Harborside Hub. The profile section there has everything you need to know about what we spoke about and more. Neatly lays it out for you, nicely structured, understandable. And then from there, link over the Harborside site. Make sure you do your due diligence, because I think it's an exciting company. They got the numbers to back it up. It's up to you to do your due diligence. Just don't say we didn't tell you so. Thanks for joining us. Have a great day. See you next time.